So in this video, I'm going to give you the top 5 tax deductions for homeowners in 2025. I'm going to tell you how you can get the biggest tax refund possible that you can get, and I'm going to tell you how this will be possible in this video, so stick around for that. If you claim and understand these tax deductions, then this will give you big savings that you might not have had in the past. And this video will help you have the biggest tax refund you ever had. So before we jump into that, I just want to let you know that my name is Chase and this is a Penny Pincher's Guide to Personal Finance. Make sure you subscribe as well as hit that notification bell so that you get more tax updates this year. We'll give you more walkthroughs, some step-by-step guides. We'll tell you some key information that's going to lead to some of the biggest tax refunds you've ever had. So we'll talk more about that later, but let's jump right into the video. The first thing I'm going to go over is going to be mortgage interest deduction. The mortgage interest deduction is one of the biggest tax breaks for homeowners. If you take out a loan to buy or to build or even to improve your home, the interest you pay on that loan may be tax deductible. For most homeowners, this deduction can be substantial, and especially early in your mortgage when the bulk of the payments is going to go towards that interest. If you make sure that you capitalize and you use these deductions, it will make a big difference on how much taxes you're paying. Now, you just need to make sure that you are eligible for this deduction. Your mortgage must be secured by a primary or a secondary home, so this can't be for your multiple other investment properties out there. And there is going to be a loan limit associated with it. So the deduction will work up to $750,000 for loans, and this will probably work for the majority of the people out there that are watching this video. If you're above that number, then you probably already have somebody else taking care of your taxes and you don't need to really worry about that. But for most people out there, under that $750,000 mortgage value, you can deduct your mortgage interest value up to that point. Now, if you are above that 750 and you say have $1 million home, then you can deduct up to that 750, but then everything after that for that 250 other interest, that does not get tax deducted. So the best way to know it would be to check your Form 1098 from your lender. And it will detail how much mortgage interest you have paid in that tax year so that you can put that onto your taxes. And really all you have to do is plug that number into your Schedule A for your tax return and you're good to go. Or if you're like most other people, just like me, what you do is you go onto your online tax software and it'll ask you these questions and it'll automatically plug that into your Form Schedule A for you. So next thing that we're going to talk about is going to be property tax deduction. Pretty much everybody out there, if you are a homeowner, you're probably going to be paying taxes to your local government. That does eat up a big portion of your total mortgage payments. And the more that you can offset that by adding it to your deductions, the better that's going to be. So there is good news though. You can deduct those payments on your federal tax return. So make sure that you are taking advantage of that. The deduction cap is going to be about $10,000 for combined state and local taxes, including your income taxes. And you must itemize the deductions to be able to claim this benefit. So make sure that you are keeping up with all the possible deductions, because if you have to itemize this, you want to be able to apply that to your tax return. All right. I do want to make sure that you don't forget any prepaid property taxes or payments made at the closing of your house will also be deductible. So don't just think that what you're be paying on your monthly basis is going into it. Make sure you're adding it all up so that that can go into your total deduction. So just make sure that you are reviewing your tax records carefully and keep those receipts handy so that you can be able to use those if you need to. All right, so the next one is going to be becoming more and more common in today's age. And that one is going to be, if you're working remotely, you can do the home office deduction. This has to be increasingly relevant to most people due to what's happened in most recent years, where they're moving their homes at home and working virtually on some days. Now, if you do use part of your home exclusively for business, then you might qualify for this deduction. Now, there are some specifics that you have to meet for that to be able to be applied to your current situation. To qualify for this, the space must be used regularly and exclusively for work, and you must be able to be self-employed. With these tax deductions, you can choose between simplified option and the actual expense method. Well, the simplified method will allow you to deduct $5 per square foot of your home office up to 300 square feet. And for the actual expense method, The other way, you'll need to calculate the percentage of your home's expenses that apply to your office. Now, that's going to be like the electricity, if you have water in that area, if there is like heating and cooling. It's really hard to be able to do that, to be able to determine the exact amount. So for most people, they will be using the simplified option, as it is usually about the same as the actual expense, and it is way, way easier to calculate. So in the end, it really just going to come down to you choosing the method that gives you the biggest deduction. So it really depends on you. And if you can't get that decision just based on you, then I would recommend talking to a tax professional. Okay, so did you know that going green can actually save you money on your taxes? Well, the energy efficient home improvement credit rewards homeowners who invest in eco-friendly upgrades an extra deduction. So this one's a little bit different because it's a credit versus a deduction, and we'll go into a little bit more depth in that in a future video. But the credit is oftentimes way better because it's going to be deducting from your total tax amount instead of how much taxes you're going to be taxed on, how much your income you're going to be taxed on. So it's actually really great if you're able to take advantage of these credits. But this item will include anything from solar panels to energy efficient windows and insulation. And so anything like that that's going to be very eco-friendly, that potentially could go onto this energy efficient home improvement credit. And this credit will really add up. Credits can cover up to 30% of the cost of the eligible improvements. And so if you're spending quite a bit of money, 30% of that really can make a big difference. And it really is important to keep these receipts, because if you're not keeping up with the manufacturer certifications for your records, and otherwise you'll have to pay, you might not be able to prove that you did pay for that you did it. So make sure you keep those receipts so that you can claim this. It is really important too. This credit is claimed directly on the form 5695. So double check that the instructions to ensure you're including all eligible expenses onto this form. Okay, so the next one, and sometimes one of the largest deductions, is going to be the mortgage insurance premiums. If you're having to use mortgage insurance premiums, then this is a big one for you. So private mortgage insurance, or PMI, which most people will know it is really big, especially if you don't put a down payment on your home. Usually if you're less than 20%, then you will be putting down PMI as well, so that they can have insurance on you being able to pay off your loan. The kicker to this one is going to be that the eligibility phases out for incomes that are above 100,000. So if you're married and filing jointly and you're above 100,000, then that's not going to work. If you're married filing separately, or you're just an individual, then that's going to be up to $50,000. And that deduction is only available if you itemize your deductions. Now, that usually isn't a problem if you're doing all the other ones that we talked about before, but just make sure that this meets that criteria. Otherwise, you won't be able to use it. Now, of course, this does change, and per the year, I want to make sure that you are getting the most up-to-date information. And as of right now, what I was seeing is that this is only available per the latest IRS guidance to confirm that it is good for your current tax year. And if you have bought your home prior to 2017, then this is going to be working. But just make sure you double check to ensure that this does qualify for you. By knowing that you have possible deductions and claiming them appropriately, you can drastically change the amount of taxes that you owe. These top 5 tax deductions for homeowners that you can help with maximize your tax refund really, really makes a difference. Whether it's mortgage interest, property taxes, or even energy efficient upgrades with credits, these deductions make a significant savings in the long run, so make sure you're taking advantage of those. In the end, if you're unsure, remember to consult with a tax professional to ensure that you're coming up with all the eligible deductions and that you're filing the taxes correctly. Because if you do it wrong, they will come at you. The IRS will come back and they will get their money. So we want to make sure that it is done appropriately so that it get rid of any headaches that might come along with that. So make sure that you stay tuned for future videos, as we will talk about how you can get the biggest tax refund that you've ever got this year. And we'll also talk about ways that you can file for free. We'll give you step-by-step walkthroughs and other things that are really useful for this upcoming tax season. So hit that subscribe and notification bell so that you get them when we put them out and you don't have to wait. And as always, we want to remind you that we are here from your first penny to your first million. We'll see you next time.